Are you struggling to find the right trading indicators to maximize your profits? Whether you're a beginner or an experienced trader, choosing the right indicators can be the game changer you need. Today, we're breaking down the top 5 most powerful trading indicators that can help you make better trading decisions and boost your win rate. If you're serious about trading and want to stay ahead in the game, stick around till the end, because I'll also share a secret pro tip on how to combine these indicators for maximum accuracy. Before we dive in, don't forget to smash that like button, subscribe to Net Worth Nest, and turn on notifications so you never miss our expert insights on trading, investing, and online earning. Number 1. Moving averages. First up, we have moving averages, one of the most widely used indicators in trading. It helps smooth out price action and identifies trends over a specific period. Simple moving average, SMA, versus exponential moving average, EMA. What's the difference? How to use the 50-day and 200-day moving averages to spot trends. Golden cross and death cross to traders' go-to strategy for trend reversals. Pro tip: combine the EMA with another indicator we'll discuss later to filter out false signals and improve accuracy. Number 2. Relative Strength Index, RSI. Next, we have the Relative Strength Index, RSI, a momentum indicator that tells you whether an asset is overbought or oversold. How does RSI work? Values above 70 equals overbought, below 30 equals oversold. How traders use RSI divergence to predict reversals. Best timeframes for RSI signals in day trading and swing trading. Pro tip: combine RSI with moving averages to confirm trend strength before entering a trade. Number 3. Moving Average Convergence Divergence. The MACD indicator is a powerful tool for detecting trend momentum and reversals. How the MACD line and signal line crossover generates buy-sell signals. The importance of the MACD histogram in analyzing momentum shifts. Best MACD settings for short-term versus long-term trading strategies. Pro tip: the MACD works best when paired with support and resistance levels. Number 4. Bollinger Bands. Bollinger Bands help traders measure volatility and spot potential breakouts. How the bands expand and contract based on market volatility. Using Bollinger Bands squeeze to predict explosive price moves. Best settings for day trading versus swing trading. Pro tip: a breakout from the bands often signals a strong trend formation. Always combine it with volume analysis for confirmation. Number 5. Fibonacci Retracement. Last but not least, Fibonacci Retracement is a must-have tool for spotting key support and resistance levels. How to draw Fibonacci levels correctly. The golden ratio, 61.8%, and why it's crucial for traders. Best timeframes for Fibonacci analysis. Pro tip: use Fibonacci in combination with trend lines for high probability trade setups. Bonus pro tip: how to combine these indicators for maximum accuracy. The real magic happens when you combine these indicators strategically. Use moving averages plus MACD to confirm trend direction. RSI plus Bollinger Bands for spotting overbought, oversold conditions. Fibonacci plus support and resistance for precise entry and exit points. By layering indicators, you reduce false signals and improve your trade accuracy. And that wraps up our top 5 trading indicators every trader should master. Which one is your favorite? Let me know in the comments below. If you found this video helpful, hit that like button, subscribe to Net Worth Nest, and turn on the notification bell, so you never miss our expert content on trading, investing, and online earning. Want to learn more about advanced trading strategies? Check out our recommended videos linked here. Thanks for watching, and I'll see you in the next one. Happy